Okay, fantastic. All right, so we'll get started, and let me share my screen. Good morning, everybody. Thank you for coming. Day after Halloween. Today we're going to be doing part 13, corresponds with chapter 13, and the topic is students, of course. One of my favorite topics, actually. Oh, just a second here. I'm trying to, why won't this advance? Okay, just a moment. I can't seem to advance my computer. So I'm going to stop sharing the monitor just for a moment here. See what is going on here. All right, here we go. Let me try that again. Again, the grounds have gotten in here again. Yep, we'll be doing the self-test right away. Correct. Okay. So, oh, here we go. Oh, I don't know why it was stuck on there. Again, just to reiterate, this is a place to make mistakes and learn. Respectful discussions, disagreements should always be respectful, no swearing, abuse, and respect class time. Our agenda today is income of students, RESP payments, student loan interest, tuition tax credit, education textbook amounts, Schedule 11, transfer tuition amounts, students and moving expenses, and adult basic education. So we will start with the self-test. So hopefully you had a chance to, oh, no, there's still more here. So what will we learn in this session? We'll define the different reporting rules for scholarships, fellowships, bursaries, and other prizes. We're going to explain RESPs in general and how these plans are affected by the Canada Education Savings Grant and the Canada Learning Bond. We'll recall the rules for the claim of student loan interest. We will also calculate the eligible tuition fees for a student on the Schedule 11 and how to transfer the required amount to the tax return. We'll also determine the unused tuition fees that can be carried forward or transferred to a parent or a grandparent or a spouse and make the appropriate entries on Schedule 11. We'll also discuss the deduction for adult basic education assistance and eligible moving expenses. So we're going to do the first self-test. I'm going to shut off my camera. But our first question is, number one, Christina is 66 years old and widowed. Her only source of income is CPP and old age security. Can Christina claim the pension income amount on her tax return? Yes or no? Let me go to the polls. And bye, everyone. All right, let me bring up the first poll for everybody. And let's go to the first one. Okay, here we go. I'm going to open the poll for everyone. There we go. All right, so the poll is completed. So let me see. Most of you selected yes, she can claim the pension amount, and fewer of you said no. So let's see the correct answer. So no. Old age security and CPP are not eligible for pension income splitting, so therefore it is not eligible for the pension income amount. Now, last night we had a question in the class, and I went back to our textbook, and right in the textbook it says that old age security and CPP are not eligible for not only the pension splitting amount, but for the pension amount. So I can bring that up at the end of the self-test if you have any questions about it, but it is in the textbook. So next question. Question 2. Judith is 67 years old. She received $10,000 in RPP annuity payments, reported in box 16 of a T4A, and $5,000 in RCA income, reported in box 17 of a T4A RCA. Judith's spouse, Winston, is 64 years old, and he does not receive any pensions. Assuming they elect to split pension amount, what is the maximum amount Winston could claim on line 11600? A, 0, 2,500, 5,000, or 7,500. I just want you to note that this is the type of question that you are going to see on your theory exam. So doing the self-test questions is a good practice. And in this question, remember how important I told you about the checklist? The checklist will help you with this. So let's just open up the polls. And I'm going to stop sharing. And the next poll, here we go. There's the next poll. So the majority of you selected either 5,000 or 7,500. So let us go share the monitor again. So the answer is C, 7,500. Eligibility is determined on the birth date of the pensioner, Judith. She's over 65. It doesn't matter for splitting that Winston is under 65 since Judith is over 65. The RCA is eligible. Since both the RPP and RCA are eligible to pension split, the amount that can be split is $15,000 and the maximum is 50%. So the answer is 7,500. So again, a little bit of a tricky question, but if you go to the checklist, it should help you answer that one. So let us go to the next question, 3. Oh, yes. I can't hear you, man. What's up? Okay. Sorry, man has to come walk over to me because I can't hear him. What's up? Yeah. Oh, it's D. Okay, so they made a mistake. Okay. Oh, sorry about that. Yeah, of course. They might have corrected it, but I downloaded this before they corrected it. So sorry. The answer is 7,500. Thanks for putting that out, man. Okay, question number 3. John and Zara separated on June 15th, 2020. As part of their written separation agreement dated July 1st, 2020, John is to pay Zara $200 a month in child support and $100 a month in spousal support. John has not missed any support payments. How much can John claim on line 22,000 of his 2021 tax return? 0, 1,200, 2,400, or 3,600? Let us bring up the poll. And the poll is open. Well, if we look at the poll results, the majority of you selected B, 1,200. Let's go back to my PowerPoint. And the answer is B. Only the $100 a month spousal support is deductible on line 22,000. No, and in this instant, no support payments were missed. So it's 12 times 100, 1,200. Excellent. Question 4. Rachel and Earl separated in July. Earl was not working when they were together and did not earn any income prior to separation. By a written agreement, Rachel paid monthly spousal support to Earl for a total of $6,000 last year. Is Rachel allowed to claim both the spousal amount and a deduction for spousal support payments? Yes or no? And there is the poll. Just waiting for the results here. It looks like the majority of you selected no, that Rachel cannot claim both spousal amount and a deduction for spousal support. So most of you did. So, correct answer is B. No, Rachel cannot claim both at the same time. She must choose one or the other. And this is unique in the year of separation. The year after separation, all she would be able to claim is the spousal support as a deduction. Next question. Final, the last one. Michael and Deborah Boyd are married and they have 3 children, Peter, Thomas, and Douglas. During the year, they paid a total of $10,000 to Jack and Jill Daycare in respect of Thomas and Douglas. Michael's net income was $40,000, all from employment, and Deborah's net income was $21,000, all from employment. Who is eligible to claim the child care expenses? Michael, Deborah, both of them, or neither? Let's open the poll. Last one. There we go. Open poll. Almost done. I can show the poll results in a second. Here we go. All right. So the majority of you selected Deborah as the person who is eligible to claim child care expenses. And yes, the answer is B. The supporting person with a lower net income must claim. And in this situation, none of the possible exceptions were listed, so Michael cannot claim a portion of it. And that is it. So I'm just going to bring up the chat. Are there any questions? Thank you, Renita, for noticing the wrong amount. There's a lot of typos in this in our material. Can we go back to question 3? Separation is on June. Payment started in July. Leanna, he paid $1,800 total, but there's an order for child payment the whole year. Okay, so we'll go back. We'll go back to question 3. All right, here, just let me. Oh, going the wrong way. So in question 3, we go back. Separation is on June. Payment started in July. They separated in July. He was not working by a written agreement. She paid. Oh no, sorry. Question 3. Sorry. Question 3. They separated on June 15th as part of their written agreement dated July. They might have, so your question is, the separation of June, payment started in July. Don't question it. It's possible that, that's right. It's possible, that's right, you have to pay attention to it. The agreement was in 2020. We're talking about what happened in 2021. So again, we don't know in the situation when he started paying. The written agreement was July 1st, and maybe he had a comment that anything paid could apply to 2020. We're dealing with 2021. So 2021, there is spousal support for 12 months of the year. Thank you, Bonnie, for that. That's correct. Yeah, so you have to, again, these are the type of questions you're going to see on the theory exam, and you have to read it carefully. So we have another question, Leanna, question 4. So let's go to question 4. Question 4 says he paid, sorry, he did, okay, so you're saying, Satish, it should be, no, it's not $2,400. Sorry, how much can he, on this 2021 return? Did we not say that? Question 3. No, he can only claim the spousal support amounts, right? He can only get a deduction. So Satish, it's true that he paid $2,400 in child support, but he paid $1,200. So what can he claim on line 2200? The deduction. Yes, child support is not deductible. So in this question, we have this person, taxpayer, pays $200 in child support, $300 and $100 in spousal. He pays $300 a month. So he does have to report that. 300 times 12 is 36, but he can only deduct the spousal support. So that's why the answer is $1,200. Is that clear? So, okay, so yes, so, okay, the answer is not zero because in 2021, he has paid $100 a month in spousal, so it's 12 times 100. No, no. If you look back at the tax return, remember there's a part where both payer and receiver both have to report to the government the total amount of support. But then Zara will have to pay, it'll be included in income, the spousal support, and then for John, he's going to get a deduction for the spousal support. No, no, it's not child support at all. Let me just bring up I'll just show you this. I'll bring up let's look at today we have, let's just look at here. Ignore the details. All right. So this is irrelevant whose return this is. I'm just looking at the T1. So on the T1, there's a section here for support payments. So on line 12,799, support payments. So this is what Zara would report the total, child and spousal. Her tax amount will be $1,200. Then on the spouse's return, he's going to report here support payments on line 21999. He's going to report the total. The deduction is on line 22,000, so that's why that would be $1,200. So is that clear to everyone? I know Satish said, is line 22000 child support only? No, it's the allowable deduction. In his case, he can only deduct spousal support. But both payer and receiver have to report the gross amount, and then the receiver has to include an income, and then the payer gets a deduction. All right, any more questions? I think I'm looking at the chat, and I think, again, you have to be really careful. One of the questions is this a question on the theory exam, Bonnie? Bonnie asked. It could be. I'm not going to tell you. I'm just saying that you will get questions like this. So to prepare for the theory exam, I would redo the self-test. And again, when you're doing a problem like this, you need to go back to, the textbook, double check your work. All right. So I'm going to...
Good one, Bonnie.
Are we good to move on? Great. All right. So let me... All right. So we'll start with our first section about students, if everybody's okay with that. Great. Thanks. All right. So students are unique in the fact that some of them will get scholarships or achievement prizes or bursaries, and this income is reported on a T4A slip, box 105. We will see that in the chapter review problem today. The taxable portion will be reported online on the tax return 13010. Am I not sharing? Yes, I am. Can you see? Pardon? Yeah, I am sharing, yes. So you should be able to see, okay, here, let me just see here. Now I screwed that up. Sorry. I was trying to make it a little bit bigger. And now I seem to have, just a moment here. I'm going to just stop sharing here just a moment. There. Okay, now I'm back. I couldn't find the little button to maximize it. I was trying to get rid of the edges here. I don't like that. All right, so let's go back to our scholarships. All right, so if a qualifying student is enrolled in a qualifying education program, the scholarship income is tax exempt. So what this means is that any student that is enrolled, even though they've got the slip, when you're in TPS, our tax software, we would enter it. But when you're doing it manually, it means that you would not report this on the paper tax return. If a student also is an elementary or a secondary school one, any scholarships are tax exempt. I personally have never seen this. Now, if the qualifying student is enrolled in a part-time program, the exemption is $500 plus the tuition fees paid, and any cost of program-related material is exempt. So in that case, you could have a qualifying student in a part-time program. They got a scholarship, so that income will be reduced by $500 plus the tuition fees paid and cost of program materials, which could be books or lab fees. If the student is not a qualifying student and receives this type of scholarship, only the first $500 is exempt. Again, I personally have never seen part-time people get scholarships. I think it's very rare. I've never seen it. However, it's most of the time full-time scholarships. However, if a student is in a part-time program and they can claim the scholarship, they can claim the scholarship exemption for full-time students if they are eligible for the disability tax credit for the year or they've had an impairment in physical and mental functions. And if you've looked at the Schedule 11, you will have already seen that one of the questions is, does the student qualify for the disability tax credit? So that is how we're going to deal with scholarships. Scholarship income. Sorry, Bonnie, what was it? Which program? Oh, in TPS. So in TPS, you would have it. And okay, so let's go back to TPS. So let's say in TPS you put in a T4A slip, and then there was no tuition, then it would go on to the return. But in the case of the software, in most software programs, it will suppress. The software knows, oh, this is a qualified student in a qualifying program full time, and it will actually suppress it. So I'm just saying to you, when you're doing it by paper, you have to remember that it is exempt. That's all I'm saying right now. Okay, good. All right, next. Registered Education Savings Plan. I'm sure most of you have heard of this, the RESPs. Again, we're going to talk about them, but a lot of the detail is not something that you're going to see in the office, and you're certainly not going to be tested on it because our job here is not to sell registered education savings plans. However, we will have to report the income and understand where a student's income is coming from. So RESP plans are set up to save money for a beneficiary's post-secondary education. Your contributions are not tax deductible. So, which is why it doesn't, when you set up an RESP, it's not going to impact your tax return. So with the case of RESPs, what makes them valuable is that there's matching grants and bonds for contributions that are available from the federal government. So if you have the means and you have children, I mean, if you don't set up an RESP, you're losing these grants and bonds that your children could be entitled to, and you as a family. Total contributions to the RESP cannot exceed $50,000, and contributions are no longer allowed after the year of the 35th anniversary of the plan opening, and the plan must be completed by the end of the year of the 35th anniversary. There's a question in the chat, are the grants taxable? I will get to that in the next slides, okay? We'll answer your question. So this is how it works. So when you get enrolled in a qualifying program, the beneficiary will receive payments consisting of a refund of the original contributions, which are non-taxable, and income earned by the funds within the plan. So when it's time to tap into the RESP, what they're saying is that, you know, you've put contributions in that are after-tax dollars, right? So the beneficiary and the parents or the contributor will get a refund of the original contributions that is non-taxable. Why is it non-taxable? Well, because it's from after-tax dollars and you did not receive a deduction from your tax return. What you also get will be income earned by the funds. I mean, the whole point of putting the money in for, you know, if you start when your children are a baby, by the time they go to school, it could be in the plan for 18, 19 years. Hopefully there will be some income growth. So the taxable part is called an education assistance payment. That's an EAP. And if you've ever dealt with this, I know both my sons went to university and we dealt with this, getting this from our financial institutions. So they would receive a T4A slip with box 42 in it, and that has to be included in the student's income on $13,000. So that's the taxable part. The growth in the fund is taxed in the hands of the beneficiary, the one going to school. So you will not pay tax on the contribution, only the growth in the fund. What happens if the beneficiary, yes, that's right, Bonnie, the growth is in box 42 of the T4A. That is correct. That is what has to be included in the income, and it's in the income of the student. Now, what happens if your beneficiary does not enroll in post-secondary education? You'll get a tax-free refund of the contributions, again, no tax implications, along with the accumulated income payments, which are all taxable, and they will go back to the subscriber. So whoever put it in, it could have been a grandparent, could have been a parent. So the AIP is reported in box 40 of a T4A slip and has to be included in the subscriber's income, line 13,000. In addition, there's a 20% tax on the AIP unless the subscriber has room to transfer to an RSP. So I'm going to go back to the question from Ying Shane, are the grants taxable? Well, this is how, if you do not go to school, then you're going to have to pay the grant back, and this is how the grant is paid back if it's not used by the student and it has to go back to the subscriber. So I do believe that the next slide explains the grants, okay? Does that, can you let me know in the chat, Ying Chen, if I've explained to you? Are they taxable? Yes, they're taxable if the beneficiary does not go to school and they have to take it into their income, then they have to pay it back at that time. So, so the government has this program. It's called the Canada Education Savings Grant. It's also called CESG. All right. So the government matches 20% of your RSP contributions up to a maximum of $500 on $2,500 of contributions per year. So I used to do this. I used to do the minimums, like put $2,500 in, and I got my $500 grant for my funds, right? The nice part, too, is that you missed making payments, unused room can be carried forward to use in a subsequent year. So so let's say you miss a year, so then you make a contribution, and the following year, you will still get that grant, up to $1,000 per year if you're doing it in arrears. There's a lifetime grant limit of $7,200. And again, if the RESP is not withdrawn for education, the CESG portion must be repaid to the government. And that's what I showed you in this slide here. In addition, that would be the 20% tax on the AIP that a subscriber would have to pay, because that is the rate of the grant. So basically, this is so go back to this slide here. So this is actually when a beneficiary does not enroll in post-secondary studies and there's no replacement beneficiary. I haven't seen that very often, but that's what's going to happen. So there's also another program called the Canada Learning Bond, and I believe that this is an entitlement of $2,000 for each child born after January 1st. The first year, the entitlement is $500 plus $25 to cover the cost of opening up an RESP. Each subsequent year, if the family qualifies, the entitlement is $100 until the child turns 15. To not lose the amount, it must be transferred to an RSP before the child turns 21. So there's a question here. RESP fund is created by taxed amount of the subscriber. Then if the RSP doesn't go to education, why does the taxpayer end up having to pay tax if they move the fund to the RSP? No, they wouldn't have to do it. No, it says here that they don't. There is a special 20% tax on the AIP unless there's room to transfer to an RSP. So in the case of a beneficiary that doesn't go to post-secondary education, then the subscriber has the option, if they have room to transfer, the AIP amount to an RSP, and then they wouldn't have to pay the tax. Does that answer your question? The problem with the RESP is that the government is giving you grant, and if you don't use the grant, you have to pay the grant back. And I'm not sure why there's a rule that says you can move it to your RASP. I don't really know. Okay, so that's right. It's the subscriber. It's the subscriber. It has nothing to do with the student, if that's what you're asking. Yeah, it goes to the parent. That's right. This is just offering parity. I mean, if you got a grant, why should you get the grant? I mean, you didn't go to school, so that you have to pay the grant back. But there's one way around it, not have to do it, and that is if you have room in your RSP, you can transfer the amount of the AIP into an RSP. Again, don't get caught up on that because we don't see this in the office. This is just a matter of, of understanding RESPs. This Canada Learning Bond, this is just an additional amount that is certainly for lower income families. So this is another way that the federal government is trying to help lower income families help putting their children through school. Are there any other questions on RESPs? Have we answered all the questions? To me, what I have seen in the office, and I don't know if Man's seen this either, because I've had children in which we've had to manage the RESPs, one of the worst things you can do, if any of you have RESPs for your children, is take all the money out in the first year. Because let's say it's like $15,000, $20,000. That means the student is going to have income of $15,000, $20,000 if you take all the money out. The contributions, again, are tax-free, but all the growth. And I've seen this, so it's very important to manage this. I know with my sons, they were in a co-op program, so I didn't want them getting that that box 42 in their income. We managed it, so if my son needed the money, I waited till January so it would go into the next year. So the AIP is the EAP is the taxable part to the student. So then so EAP is the education assistance payment that the student has to pay tax on. If there's no beneficiary, then the growth, the AIP is the growth. It's the accumulated income payment. So it has to go into somebody's income. So if the student is drawing on the RESP, it goes into the student's income. If the parent has to accept it back, has to basically close the RESP, then they're going to have to put it in their income. Does that explain that? Somebody is going to pay tax on the growth. You can't hide the growth forever. Is that understood? Can you let me know in the chat? Yeah, I've never seen this in my 10 years of having a subscriber. Most of the time people don't have enough money. It barely covers your education. Did you ever do RESPs, Nan?
No, I haven't seen them.
You can do it with your son.
Yeah, I have it for my son, but I have never did that. Somebody came with a withdrawal from an RESP, a T4A, I mean.
Yes, okay, yeah. So I'm just saying that, to me, what would be more valuable is how to manage this. I remember my son, he had a work term of 8 months, so he had good income. I would not take the money of the RSP the year he had lots of income. I actually did it someone's return in which they took all the money out and the kid had to pay tax on it and use up his tuition. So, you really need to manage the growth in the fund and when it goes into the income of the student. All right, so that's pretty much RESPs, okay? So we don't, we're going through way more detail than you're actually going to use in the office, but that's great. Yeah, it's a little bit of a headache. Actually, it is interesting to understand how these work. And that's kind of the nice part about being in this course. You learn a lot about how to plan for your retirement and how to plan, education assistance to your children. So, all right, so the next thing. Student loans. Okay, so students could have income from the RESPs. Sometimes they have to take out loans. So there's different loans. Loans, to qualify for student loan interest, loans must be obtained under the Canada Student Loan Act or the Canada Student Financial Assistance Act or the Apprentice Loans Act or similar law. So this is once the student has finished and now they have a bunch of debt because they borrowed money through, I know in Ontario it's the OSAP program, but so they don't have to pay anything until they graduate, and then they'll if they can't pay it off, then they'll have to pay interest on their student loan. Yeah, good for you, Renita. Yeah, student loan. So the Student Loan Act, or the government agency, they will give out an official receipt. We need that in the office to claim it. Only the interest can be paid, not the capital, of course. So you're only paying, the interest that you paid on it can be claimed. It's entered onto line 31900 in Part B of Step 5. That is, again, a non-refundable credit. A lot of times students have low income, so sometimes they can't claim the interest. So they can claim in the year the interest that was paid or in any of the subsequent 5 years. So there is a carry forward of 5 years for the interest payment. If you can't claim it, then you can carry it forward to the next year for up to 5 years. And only the student can claim the student loan interest credit, even if somebody else made the payment. So maybe a parent is helping them out. The student is the only one that can claim it. Now, I just want to emphasize that these are loans that are obtained under the Canada Student Loans Act. I've had many students in the office that have set up a line of credit at certain banks, and it's called, a student line of credit. A line of credit is not the same as a loan. So people will come in with their line of credit saying, look at all the interest I paid. It cannot be claimed. It has to be obtain under these acts, all right? Not a student loan, not a loan from a bank. It does not qualify as student loan interest. Yeah, exactly, Zane. This is like an OSAP, exactly. I don't know what the other loans are. A lot of times when you get OSAP, they tell you what program it is, but OSAP will be part of it, and then you will be dealing with this Canada Student Loans Act, and they have official receipts. You can actually, as a student, go onto your account, and you can see how much you owe. Yeah, I know, OSAP is, yeah, that's right. Yeah, it's always been like that. It's very, very tedious. You have to be right on top of it, too, to make sure that like my sons do co-op programs, so, when they go into the 5th month of their co-op, they have to communicate with them to say, no, I'm not, I'm still in school, I'm in a co-op program. It is a headache. It is such a headache, I agree. I can't wait till my sons graduate. Yeah, that's right. You need an education to learn how to pay for your education. That's right. Anyway, okay, so student loan interest. So now we're up to tuition credits. Yeah, and a lot of years to pay off. That's right. My son, he's in 4th year, he's already stressing about it, and he's like, Mom, can you pay off my loan and then I'll pay you? And I'm thinking, I don't know. What's in it for me? Anyway, of course I want to help my son, of course. Anyway, okay, so now we have the tuition tax credit. Yeah, as long as he gives me his tuition tax credit for this year, next year I'll be happy to help him out. So tuition fees include various other eligible fees. So if you've ever looked on your student's statement, all the things they're paying for, there's clubs, there's athletic facilities, there's so many things they're paying for. However, only the eligible fees are included on a T2202 slip or an official tuition receipt slip. So here in Canada, if you're in a university or college program, you're going to get a T2202. If you are in maybe in the States, it's a different form. So licensing exam fees are eligible if they're required to obtain a professional status to practice in Canada or trade. So that is an example of a type of tuition fee. Fees are claimed in the year incurred as opposed to when they were paid. So you could have a student who goes to school between September and April, and maybe all the fees for the whole year are paid in September. You can only claim the fees for the first 4 months. So that would be from September to December, and if you paid the fees for the next term in the winter, that will be paid in the winter term. So for tuition fees to be deductible, it has to be a post-secondary course provided by a college, university, or other educational institution. Other courses qualify if the student is at least 16 at the end of the year, and the course is taken to develop or improve the person's occupational skills, as opposed to taking a course for recreation, personal enjoyment, or personal development. Fees must be over $100 and must be incurred for the taxation year. Fees paid to an education institution, a professional association, a professional ministry to take an exam that is required to obtain professional status will qualify, which means that, and I think we mentioned in the textbook, if you had to do the LSAT or the MCAT, that is not considered an eligible fee. However, if you do end up graduating and you are a lawyer and you are a doctor, you have to sit for exams, they are considered tuition and would be a non-refundable credit. So again, let's talk about incurred. A January to April 2021 course will be claimed in 2021 regardless of when they paid for it. They might have paid it in December of 2020, but it's only, that's what it means by claimed in year incurred. So I'm going to go to the textbook now, just a moment here. Let me go to the textbook. I brought up the textbook. Let's see if it's here. Nope, we have to do it again. Just a moment here. I thought the textbook had a very good example of tuition fees. So here we go. Let's go to our Federal Tax Library, fundamentals here. Let's go to chapter 13, students. See, you can see I actually read the textbook, right? Let me just see here. There's RESPs. It does explain it quite well. Different plans. The learning bond. Okay, so let's, student loan interest, we already covered. Tuition. Okay, so let's look at tuition. So, again, it says here, fees for examinations taken to gain admittance to a medical college or law school do not qualify. So, tuition fees, explain the rules. Here's the tuition. I thought that, I don't know if anybody did this, but I thought this was a really good, very good. Where is it? Did I miss it? Yes, I did. Sorry. I'm trying to see tuition fees. Tuition fees. I thought they had a, maybe it was in one of the exercises here. Oh yeah, it was the exercise. Sorry. I thought this was an excellent exercise here. So let me just take out all the answers and let's do it in class now here. Don't look while I take all my answers. Anyway, okay, so it says indicate whether the fees paid for the appropriate items are allowable or not allowable as tuition fees by entering check marks. So our student athletic fees, tell me in the chat, are they eligible for tuition? Okay, so we have yes and no, yes and no. It is, yes, it is allowable. Use of libraries and laboratory, is that yes or no? Yes, it is. Next one, tuition and related fees for admission. Of course. Health services. Yes, yes. Cost of books, other than costs that are an integral part. What about cost of books? That's right, it is not allowable. It is not allowable. I'll talk to you about that after we're done here. Examinations and reading examination papers. Is that an allowable tuition? Yes, it is. Thank you. Charges for room for board and lodging. No. My class last night was shocked. They were like, "What? We pay so much." I know. That's probably more than the tuition, the room and board and residence. Student association fees. Is that allowable? I think it is, actually. I think it is. Anyway. Professional exam in order to practice in Canada. Well, we just discussed it. Yes. Degree or diploma. Yes. Admission exam to medical college. We already discussed that. Twice I mentioned it. No. So let's look at the correct answer. Did we get it? I got it right. 3, if there's 4 and 1, and then yes, and oh wait, no, student association fees are not. See, I can't remember. I did this last night and I still don't remember. So those are the ones that are allowable. So this is very good. So again, you're not going to have to go through the tuition. Basically, you take the tuition fee statement, but we have a lot of people that ask about charges for room and board because they're so humongous. So there's nothing. And then the cost of books. So prior, I think it was in 2018, the slide tells us that the government changed it. There used to be a credit for books, and it was called an education credit. For every month that a student was in school, they'd get like $60 credit. So that would be, if you're in school for 8 months, that would be an extra $3,200 added to your tuition. So the tuition credit was a lot more generous. It's been cut in half basically, and that is exactly what was. And that would, they'd say, oh, that takes into account your lodging and your books. So, because people will come in with their book receipts, and if they're a full-time student, they couldn't claim that. So any questions on what constitutes tuition? Again, you're not going to have to do that, but you will have people who come in and say, oh, I can claim my books. Can I claim my room and board? No. Now, I will discuss with you later about what benefits students can get from their room and board, and if they rent, there's the Trillium benefit. That's a provincial consideration. But on the federal tax return, there's no credit for the room and board when you're living away from home and going to university. So I will move on if there's no more questions. All right, so tuition fees may be claimed for post-secondary courses taken at a university, college, or educational. And again, they're to develop or improve the taxpayer's occupational skills. I think we already did that. Tuition fees, there's a rule that they have to be over $100. So tuition fees must exceed $100 per educational institute to be claimable. If multiple courses at a single institution add up to over $100, then they can all be claimed. However, if you have separate fees of $100 or less paid to different institutions, it cannot be claimed. Now, I can't imagine there's any places, university or college, that their tuition fees are less than $100 a course. I can't imagine. So I'm not quite sure why we have this $100 rule for tuition, but there you go. So the good part about is in this course you're taking, the H&R Block course does fulfill the requirement. You will get your tuition fees. It's over $100. I know for once you're an H&R Block employee and you take future courses, we only pay $33. So I don't get a slip. So I pay my $33 to take my above level 1 course. So, and no credit for that at all. So tuition fees, tuition fees paid by a third party. Tuition fees do not qualify if they are paid by the following: a federal or provincial job training program. So basically, they're saying you can't claim, even if you got a T2202, if a third party paid for it, you can't take credit. You can't take the credit. You can't do it if you got tuition fees paid by a program to assist athletes, or if you had an employer who is paying for your fees, or an employer of your parents, right? However, if the employer pays for the tuition and it's included on the parent's T4 slip, then they would be able to claim the tuition fees, and that makes sense, right? If you're going to pay tax on it because of a taxable benefit, then you can take a credit for it. So next comment. So certainly students go to institutions outside of Canada, and tuition fees may be claimed if the institution is a university and the student is in full-time attendance in a course leading to a degree, and the course duration is at least 3 weeks. And the $100 fee rule in this case does not apply when these requirements are met. Tuition fees paid to an institution outside of Canada are entered separately on the Schedule 11. So there's a line on the Schedule 11 for Canadian universities, and then there's one for foreign. So it's treated the same way, but it's just being segregated. The thing is about the foreign tuition fee receipts, they are not sent to the CRA. So that's why they're probably putting it in there, and it gets audited. I have a client who is always being audited because they're at some Texas university, and the tuition fees were crazy, like $16,000 for a semester. Yeah, I think it was really, really high. So what type of tuition receipt do we get? Proper documentation is required to claim the fees, and we need an official receipt. And for the Canadian educational institutions or a flying school in Canada, it's a T2202. So, and then the reason H&R Block asks for your SIN, and students now have to provide their SIN, is that the CRA requires the universities to forward that information to CRA. So before, we used to be chasing down tuition receipts for clients. They usually don't come out till like third week in February, but you know, if you were doing somebody's return that was from a few years ago, they wouldn't be able to get, they'd have to contact the university to get their tuition receipts, and it could take, you know, really delay doing the returns. Now it will be on Rep-A-Client, which is such a bonus, such a nice thing. So that's the T2202. If the student is in a university outside of Canada, it's a TL11A. If they're a commuter to the U.S., so that would be a border city, they would have a TL11C. I've never seen this. And if they're in an educational institution outside of Canada and they are a deemed resident, it'll be a TL11D. I've only seen the T2202 and the TL11A. I haven't seen these other ones. Have you seen those ones, Nan? The 11C or the 11D?
Just up to the TL11A.
Sorry, I can't hear you.
I didn't see the C and D.
Okay, all right, okay. Oh, well, thank you, Monty. That's why I like being an instructor. I want to share my experience with you so you know what to expect. So I actually had an instructor who was really good at that, so I really like that. All right, so now we're going to look at the actual, how do we claim the tuition tax credit? Well, we're going to use the Schedule 11. So eligible tuition fees are entered on line 32,000 of the Schedule 11. And so we have eligible tuition fees paid to an institution outside of Canada are entered on a different line. And then we're going to enter enrollment information. Box 3205 is the student eligible for the disability tax credit or has a mental or physical impairment? And then in box 3210, we're going to put in the number of months part-time enrollment, and then the other box, number of months in full-time enrollment. And this is what helps from the software to determine, are they going to suppress the scholarship income or not? These are the boxes that are important. So the amount of any federal tuition transfer is entered on line 32,700 of the Schedule 11. And I think they want me to bring up the Schedule 11, but I'm trying to see if we have a slide for it. No, we don't. So I will bring up the Schedule 11 after we look at the tuition. So here is the T2202. It tells you what year it is. It has your student number. It has the name of the university. It has the program that the student is in, the name, the address, and the SIN. So this is new in the past years of the students providing the SIN. And you notice that it tells you what sessions the student has participated in. And here it tells us that they were in January to April of 2021, 4 months full-time, and the tuition fees are $1,700. Then they also had a session from September to December of 2021, 4 months again, $1,800, total tuition $3,500, 8 months full-time. So these are the key. This is the key information that we're going to be putting into our software, but we're also going to be putting this into our Schedule 11. And, okay, so we're not going to do that. I'm going to bring up a Schedule 11, and let's just have a brief look at it. I think I'm going to just bring up the problem that we did for this class. We'll look at Richard here. Richard had a Schedule 11. So here is the Schedule 11. Yeah. So again, we're going to put in if there's any unused tuition from the prior year, because the student didn't use it all, here is eligible tuition fees paid to Canadian educational institutions. There's the amount. On this line here, we have eligible tuition fees paid to foreign educational institutions. That would be here. And then the enrollment information, tick this box if you're eligible for the disability tax credit. You tick it off here. Enter the number of months you enrolled as a part-time student. Here, enter the number of months you enrolled as a full-time student, 8. You'll notice that it's a maximum of 12. You cannot have more than 12 months. You can't put in 13 or 14, right? So that's, in essence, that's part of the tuition. I just wanted to show you tuition form Schedule 11. We will go into more detail later, but I just wanted to show you that for now. And let me bring up my PowerPoint, which I seem not to have anymore. So let's go to here and here, just a minute, let me bring it up. There we go. There, T2202. So the other thing that makes tuition so valuable is if the student, the tuition fees are always the students, right? It has to go on the student's return. So if the student doesn't need their tuition, because a lot of times students have a lot of times students don't have any income. They don't need it. So the option in the year that you've incurred tuition fees is you could transfer up to $5,000 to a parent, a grandparent, or if you're married, to your spouse. And basically the T2202 slip has 2 pages. The first page is the one we just saw, and the second page is the student needs to sign sign it and fill it in if they are transferring it to a designated individual. So the student would select an individual, and it would say how much could be transferred, and they need to sign and date it. A lot of times this isn't printed out, or the students don't come in with their tuition, but I believe it, when you print out the T2202 from Rep a Client, you will get this. So, so this needs to be filled out. So, yeah, so I guess it's break time. So are there any questions about this before? Well, we'll go on a break, and then we'll come back to finish the section. Do most people transfer tuition to parents or leave it for the student in later years? All right, so let's be clear about tuition. And you know, 10 years of doing this, the funniest part about parents coming in with their students is that parents smell the refund. They want the tuition transferred, right? Don't they, man? They're not the least bit interested in the student's return until there's tuition that could be transferred. So the rule is that it's the student's tuition. So, you know, it's the student's decision to either carry it forward if they don't need it or transfer to their parent. Some parents come in and they act like it's theirs. But the CRA is very clear. The tuition has to go on the student's return. I've had parents who've done their kids' returns and put tuition on theirs and never put it on the students, right? So, so there's a lot of ownership. Because the refund, you can transfer up to $5,000. So let me know in the chat, how much is that worth to a parent if they can transfer $5,000 to their own return? What is it worth in terms of refund potential? Nope, it doesn't, Michael. No, it doesn't. It's $750 because it's a non-refundable. It's 15%. So it's 5,000 times 15%. It's going to contribute $750 to a possible refund amount. Thank you, Abby. Exactly. It doesn't depend on the marginal tax rate. So, and before, so before, when there was a provincial credit, it used to be a lot more than that. It used to be about $1,250. So, but the thing is, it always goes on the return of the student. It's up to the student. Some students, you know, they're not being supported by the family, so they don't transfer it. I've had people in the office, and the parent will say, "No, no, no, you keep it for you," and then the student goes, "No, no, 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 you're so supportive." So really, it is very unique. What do I see most of the time? I see most of the time people, I would say half the time they transfer it, and half the time they keep it. They keep it themselves. So really, it's a discussion with the student and what they want to do. All right. Any other questions about tuition transfers at all? So we'll go for a break. It's 10 after 10. So I'm going to stop sharing. And there we go. Stop sharing. Oh, there's a chat, another question in the chat. Should we ask them or assume they don't want to transfer? I think that, Paula, we need to discuss it with them because, when students come in their first time, they don't know. We need to talk to them about, explain the tuition to them. Explain, you can't use tuition, your income's too low, so we can carry it forward or you can transfer it to a parent. What would you like to do? Sometimes parents will have deals with their student and say, look, that maybe the student wants the money and they'll say, look, can I transfer it to you and then you can give me $750? So sometimes students want the money rather than waiting for 4 years. But don't assume they want to transfer it. You need to have a discussion with them. And a lot of times you will be educating them. Is tuition for masters? Yes, I believe it is. The sheet, yes, absolutely. Tuition for a master program. Why wouldn't it be? That's right. So any other questions? Because we'll go on our break. I'll just break. Oops, sorry, I lost my chat here. Break time. We'll go from it says 8:10 on mine. So it's so weird to see these Alberta times. All right, so let's go to 25. So 15-minute break, and so I'll see you all in 15 minutes. A lot and chatted because, oh, can't hear me. Okay. Can you hear me now? No. Let me see. Oh yeah. Abby says now we can hear. Honest to God, we go out into the parking lot for 10 minutes and come back and all hell breaks loose. Okay, thank you. Okay, awesome. All right. So Man and I take the mask off here. There we go. Awesome. I'm glad everybody's here. Back. Okay, so how do we claim tuition amounts? Well, tuition amounts are claimed on the Schedule 11. I just briefly showed you where we enter them. And credits must be applied to reduce the student's taxes payable to zero. So basically, on the form, what we're doing is we need to report what their net income is, and then what non-refundable credits come for the tuition. And so we're trying to determine, does the student need to claim any of the tuition at all? So that is calculated on the form also. So then the credits used in the year are claimed on line 323 in Part B of Step 5, which is the non-refundable section. Any excess credits for the year can either be carried forward or transferred up to a maximum of $5,000. And I just want to reiterate, if a student has tuition credits carried forward from the prior year, these cannot be transferred to a parent, grandparent, or spouse. Only tuition amounts in the current year can be transferred. Once it's carried forward, you'd have to do an adjustment, or you can only claim the amount that is incurred in the year. Very clear. And the Schedule 11 is set up to do that for us. So we will move on to the next topic. Is another part of the Schedule 11 is an item called the Canada Training Credit. This was, I think it was 2 years ago that the government started it. So basically there's now a refundable tax credit for taxpayers aged 26 to 65 to further their education. Clearly the government has recognized that people are going to go back to school in their lifetime. I mean, in my father's lifetime, in my husband's father's lifetime, a lot of people, you went to school, you got your training, and you usually stayed in those jobs. Well, now we're constantly training for new jobs. I know my own husband, he was an engineer, worked for 10 years, went and got his MBA, worked for another 10 years, then he went back to teachers college, so he's been to school at least twice to get training to do other jobs. So certainly this is a reality now that, the job you have when you're 25 will probably not be the job you have when you're 55. So the Canada training limit accumulates at $250 a year, and it depends on employment income. You have to have employment income, I believe. Anyway, the government calculates this, and it will be on your notice of assessment, your training limit. I don't know if anybody's looked at it, but the training limit will come into play if you are in school between the ages of 26 to 65, and you'll get a credit. So the maximum lifetime amount is $5,000, and the credit is calculated as the lesser of the Canada training limit for 2021 and 50% of your eligible tuition fees. And then this is calculated on the Schedule 11. So Renita asked a question, does this count for credit? I'm not quite sure what you mean by that. This course. Yes, it should be. Yeah, it should be. If you have the Canada, yes, it would. Absolutely. If you're between the ages of 26 to 65 and you have the Canada training limits, you'd have to look at your own notice of assessment to see if you have this training limit. All right, so let's just see here. So to accumulate the $250 for the tax year, taxpayers must be between the age of 26 and 65, and on their previous tax return have had working income of at least $10,000. So that's how you're going to get it. So you need to go look on your own NOA. So individuals' net income that is less than the top threshold of third bracket for that year. So certain people, if you're less than 151,000 in 2021, you will get $250 for 2022. The total accumulated Canada training limit can be located on the previous year's NOA or online with your My Account, or we can access it through Rep-A-Client. So yeah, ODSP probably doesn't count because it has to be working income. Institutions outside of Canada are not considered eligible tuition for this credit. And then in the textbook, we can see an illustration in 13-6, 13-7. So let us go back to the textbook and have a look at that. There we go. Okay, so let's look at the training credit here. Training credit, there we go, training credit. They want you to see the illustration. So here we have Michelle turned 32 in 2021. Because she falls within the income parameters, she accumulated $250 towards her Canada training limit each year starting in 2019. So that's when the program started, 2019. So now by 2021, her accumulated limit is $500 because she filed in 2019 and 2020, and we're just talking 2021. So in 2021, Michelle had eligible tuition fees of $900. She can therefore claim a Canada training credit of $450, calculated as the lesser of $500 or 50% of $900. So she'll claim and this is refundable. So her Canada training limit is now $50 because she used up $450, and she's also eligible to accumulate another $250 based on the income reported on her 2021 tax return. So as a result, her training limit for 2022 would be $300. So here is another example. Here's the calculation that's showing you in that section. Here's somebody who there's a tuition credit, and then what's your limit? So whatever's less. So the calculation is on the Schedule 11. So, and here she said she's a resident of BC. She's 27. She paid $1,100 to take a course in hotel management at a local community college, which was certified by the Employment and Social Development Canada to issue tuition fee receipts. So she's going to be able to claim. She will be able to get this enter the training credit you're claiming and put it online 4, 5, 3, 500. So that's the refundable part. So then you're going to reduce her tuition by $500. So now she has $600 of tuition available to take. So it's a bit of a trade-off, but you can see how it'd be helpful for people who have the tuition and they get the credit now rather than carrying it forward. So in some cases, a taxpayer's non-refundable tax credits may exceed the taxable income, in which case a claim for tuition fees is added to the tuition carry forward. In the event they decide to claim the credit, the amount of tuition fees can be transferred or carried forward to reduce, and is reduced proportionally both federal and provincial purposes. So this is something we see more and more, the interplay between the tuition and the credit. So we're going to move off of that, and we're going to talk about, that's the training limit. So we've discussed briefly the transfer tuition amounts. A student can transfer unused tuition amounts to a spouse or common law partner, a parent or a grandparent, or the spouse's or common law partner's parent or grandparent. Married or common law students may transfer unused amounts to a parent or grandparent only if their spouse or common law partner doesn't claim any amounts on line 30300. So I've actually never seen that. I've seen most of the transfers I've done have been to a parent. Man, what transfers have you seen mostly with students?
I have seen both to a parent and to a spouse.
So you've seen it to a, you've seen it, I've never seen with spouses, I don't know.
Yeah, I have a couple, his wife, he's doing some higher education, like masters or something, in marketing.
Okay, great. Thank you, Bonnie, for clarifying why you sent a 3 in the chat. The cat wanted to say hi. Yeah, the cat loves being all over your keyboard and your materials, don't they? Anyway, I love cats. Actually, that's what Man and I were talking about before the break. We were discussing cats. I love cats. Man hates cats, but we still like each other.
Just correction, I hate pets. That makes me look mean.
Okay. Anyway, okay. Before, okay, so this is, I talked about this before the break. Before a tuition amount can be transferred, the amount available for transfer must be calculated on the Schedule 11 of the student's tax return. And the transfer amount is entered on line 32700 of the Schedule 11. It is not possible to transfer any amounts that were previously carried forward. So I just want to reiterate that. You cannot do that. And then the designated individual must have a signed copy of page 2 of the T2202 from the student designating the transfer. Before the break, Man mentioned to me that usually that second page is not on RepApply. I thought it was, but it is not. So you can get a blank form on the internet. I know I personally have been doing this for 10 years, and people would bring in their tuition statements. They'd have page 2. I collected page 2s. I have a Ziploc bag filled of pages of page 2. So I just use that in the office. I've never had to get it off the internet, but we will need to do that. So if a student designates a parent or an individual, they'll have to give a copy of that form to their parent or grandparent or spouse, and then keep one in their file. So they have to have a copy. So again, we're reiterating the fact that the tuition amounts go to the student first. In the case of a parent or grandparent, they can claim a tuition transfer on line 3240 in step 5, part B, non-refundable. If it's a spouse or common law partner, they can claim a tuition transfer on Schedule 2. We've already seen Schedule 2, and if you remember, there was a line for tuition. So then it would be included in the non-refundables there. So that's basically the transfer amount. Once we get through here, we'll actually go through the form quite carefully to fill it out. Next, I mentioned to you that there used to be, most of the provinces used to have this education amount in addition to the tuition amount. So we used to be able to use tuition that was incurred in another province. You came here, you could apply it. However, the amount that a designated individual can claim must be recalculated based on what the student could have transferred if he or she was a resident of that province. So basically, this doesn't apply, but certainly if someone came from another province no, I'm sorry, I'm getting mixed up here. Except for Alberta, Saskatchewan, Ontario, Manitoba, and PEI, there's no interprovincial transfers anymore. There used to be. So in the case if there is an interprovincial transfer, the amount must be recalculated based on what the student could have transferred if he or she were resident of that province. Again, we don't need to get into this because it was eliminated in Ontario. In that case, the student, we would have to restate the amount, recalculate it, and it would put on page 2 of the T2202. And then on line 20 of the provincial schedule, the student would enter the lesser the amount. You will probably not see this ever. Even when we were doing it, I didn't see it very often. So, but there is, the rules for interprovincial transfers are available in the reference book. So in facts and figures, there is a chart called interprovincial transfer and carry forward amounts. So basically, this occurs when students in the transferee are resident in different provinces. So the provincial carry forwards also change when a student moves their province of residence from one year to the next. I used to know all these rules. Sometimes they would be the same as the federal amount. So I think that was PEI used to be like that. But in essence, Saskatchewan and Ontario no longer allow for claims of tuition amount. Therefore, no amount can be transferred to a student's parent or grandparent living in one of those provinces. So you're not going to see this, but just be aware of that. That was an issue. So, but because Ontario eliminated it, here's the next slide. So for Alberta, Saskatchewan, Ontario, residents of the province cannot claim a transfer of unused amounts from a child in another province. And this has been going on since 2018 in Ontario when they changed this. So that means that if a student is in another province and they have tuition, it cannot be transferred. There's no interprovincial transfer. And then the next few slides are about Manitoba. This is what you can do in Manitoba, but we're not dealing with Manitoba. This course we're dealing with Ontario. Because I'm doing the course in Ontario, we don't need to discuss this. Carry forward from a different one. So again, it says Ontario, the provincial tuition amounts have been eliminated. There's no provincial tuition amounts from other provinces can be claimed. So you can basically ignore that part except to be aware of there is such a thing. So we're here in Ontario. Perhaps you move to a province that still has it, then you would want to look into these rules. So moving expenses. So a lot of times students move to go to school. So, and of course, moving expenses claims for full-time students are limited to their taxable amount of their scholarship and bursary income. So in the chat, tell me how many students do you think are going to be able to claim moving expenses against their scholarship income? What do you think? Exactly, very few. Because your moving expenses are limited to your taxable income of your scholarships. And we just determined that most scholarships for full-time students are exempt. So you can see that you're not going to get a lot of students that are claiming it. However, a student who moves to go to school and is still working, they could easily make a claim that there was a dual purpose to the move. In this case, their moving expenses could be claimed against employment income because, they're both working and going to school. So, you could say that they moved to work. So you could claim it. I've never had a student be able to claim moving expenses. I myself, when I was a student, always looked at this and going, can I claim it? I could never claim it. I was so frustrated, right? So again, scholarships are usually tax exempt. So the special provision is basically for students who maybe move they get research grants, and that's why they moved. Students with summer jobs may be able to claim moving expenses if they, got a job and they have to move away from home or for where they're in. However, it must meet the change of resident requirement. And what we mean by that, if a student moves to take a job and they are provided with temporary accommodation such as a bunkhouse or staff quarters while working the summer job, then they move back to the same address, they will not meet the change of residence requirement because it's like accommodated, because they had a special situation. However, if the student does move somewhere and have to pay rent at the summer job, they should generally qualify. Do you know how some of the jobs are so remote? Like I know in BC, I remember the Columbia ice fields, and they had to provide lodging for students because there's no accommodation. So generally, those type of employers in remote areas have to provide accommodation. That is not this is not a permanent place. Remember, it's just a temporary accommodation. So the other issue with students from different provinces is that which is their province of residence when they file their tax return. As a general rule, a single student who is renting accommodation while going to school will normally be considered a resident of that province. So for instance, my son's girlfriend, Mel, she came from PEI, and she came here, and she is at Guelph, and she was in a student residence. A student resident is not considered establishing residential ties. So for her tax return when she was in residence, she is still considered a resident of PEI. However, now she is renting a townhouse with a few other people, my son included, and now she can be, we can make a case for her that she is resident of Ontario. So if a student is living in temporary accommodations such as student residence, you have to look at the secondary ties. For example, location of their belongings, their health insurance, and driver's license. So again, it can be tricky. Sometimes we get questions like this about what is the correct residence for a student, and it's usually what is their lodging in the where they're going to school. So are there any questions about that? So I just wanted to take a moment to, I know earlier we were talking about what qualifies for tuition. And one thing that is a big expense for many students is their lodging. So what kind of credit can you get in Ontario? You're not going to get a federal credit, but in Ontario we have the Trillium benefit. We will talk more about it on Thursday. However, I just want to mention to you that when a student is in a residence, usually it's on university property and they don't pay property tax. So in the case of a student being in residence, the most they can claim on the credit on their Ontario taxation is $25. And of course, we know that residence is incredibly expensive. The only credit they're going to get is $25. And I will show you when we start doing TPS where to enter that on the assumption that you will be doing taxes in Ontario. However, if the student actually has to rent a place, doesn't live on residence, they're paying rent, they can make a claim for the property tax credit for the rent that they claim. I've done many students can put in their rent receipts. And I'm going to tell you that it's audited a lot. So students really need their tax receipts. And certainly students, they get a lot of benefits because they do tend to be lower income. So they will get probably the GST credit, which is federal, but a lot of them will get the Trillium benefit. So I just wanted to mention that to you, which we'll talk more about on Thursday, but this is a significant amount of benefits for students. So our last topic today is about adult basic education assistance. So sometimes people can get sponsored to get some adult education through the employment insurance program, and if the benefits are identified as non-taxable tuition assistance, they'll have to report it, and then they get an offsetting deduction, so the net effect on the return is zero. However, if the benefits are identified as taxable tuition assistance in box 20, the program qualifies for the claim of tuition fees. So in that case, yes, their tuition assistance is taxable, but they also can make a claim for the tuition fees paid. So that's basically this chapter. I thought it was a pretty easy chapter, except for the interventional stuff that used to drive me crazy, but I'm glad it doesn't really apply. So are there any questions before we get going to the problem? So we know that we have the chapter review problem assignment number 2, And I just want to mention what they've mentioned in the book about what you need to do. They want to make sure that you use the fillable forms again to complete the assignment. Make sure you do that information before you go into ULearn. So if you look at the assignment, it's basically answer these questions and do the tax return and the required schedules for Kristen. You need to do that, so save that so that you will have this information when you go to do the assignment. So before you open assignment number 2, the data entry part in the transcript in ULearn, make sure you have at least 3 hours of uninterrupted time. You cannot stop and restart once you have opened the assignment answers in your transcript. So once you've done everything, go into your transcript, go to the open the assignment into a separate tab. So this is what Joe mentioned. Make sure you have 2 different tabs, so you can have up the ULearn, and then you can have up your refillable forms, or you can have your textbook up. So because you cannot leave that site. So make sure that you have 2 things open. I mean, some of you may have 2 monitors. I know I do in the office here, and I do at home. I have 2 monitors. It makes it a little bit easier. So again, don't open it until you're ready. And yeah, and Bonnie just said I printed it out. I do. I print everything out. I can't do everything online. I print everything out. So if you're able to do it, make it easier. However, you know, again, you may have to. I don't think you probably have to do any research, because by the time that you've prepped for the assignment, you've answered the questions, you've researched it, you have got your fillable forms filled out, so it shouldn't really take you 3 hours. I also remind you to, when you're entering the numbers, don't use the $sign, and the numbers have to have the, all entries must be numbers only with the correct use of the commas. You need to be entered to 2 decimal places. So again, 1,000 is 1,000.00 and 0 is 0.00. So are there any questions about the assignment? Which, again, for this class, you can certainly do it now, complete it now, and put it in, but I've given you till the Monday, the 7th by midnight to do it, just because I understand that you might not be able to get it done in a day. So I remember how we discussed that. So good for you, Bonnie, completing it. So any other questions about it? I did find that it was a simpler assignment than assignment number 1. And the other thing that threw a lot of people I got questions about was there's a lot of information. Basically, this problem is designed to be a 3 return problem. It's a family. We would do 3 of them, but we're only asking you to do part of it. So there is additional information in the assignment that you don't need to know, right? So it can seem overwhelming, but it's important to, get in this problem and you look through what is required and what is not required. So that's very important to be able to determine that. So if there's no other questions on the assignment, then we'll go to the chapter review problem 13.2. So let me find it in the textbook again. Here we go here. So 13, so there's 13.2 here. And again, pay attention to the requirement. They're asking you answer the questions and complete, they said complete the federal tax return for Kristen, including the Schedule 11. All right, so now we have chapter review problem 13.2. This will certainly help you reinforce your learning and reinforce what needs to be done for the assignment number 2. So we have a family. Kenneth is the father, he's divorced. We have Richard, the son, and then we have the mother, divorced and hasn't been remarried. And we just have their all their information here. Again, there's a lot of information in here. I'm going to go to the requirement. What does the problem want you to do? They want you to fill in the questions and then do Richard's Schedule 11. So there really isn't a lot to do in here, but here I'm just going to take out all my answers because last night I put them all in for the students because last night's class didn't even do. I was doing it all by myself. Anyway, so let's go back up to the problem. So what do we have here? Kenneth Blake works for a local mining company as a superintendent. He is the father of Richard. At the end of 1999, Ken and his wife went through a bitter divorce. According to the court order dated September 29, 1999, Ken must pay Edith support payments of $520 as long as she doesn't get remarried again, and child support of $780 per month until Richard turns 25. So because the problem states that she's divorced, you know that there hasn't been a change in marital status for her. So we're going to assume that, yeah, she is divorced and single. Or she could be dating somebody, who knows. It's not relevant. Even though Ken makes these payments every year, he never reported them on a deduction on his TD1 because he wants to use his tax refund to invest in mutual funds for himself and in an RESP for Richard. So Richard, the son, is enrolled in full-time studies at the University of your city. Even though he lives with his mother, he wants to transfer his unused tuition amounts to Ken, his father, this year. Over the years, Ken paid into an RESP, which now comes in handy and helps Richard to pay for his courses. Richard also received a scholarship of $5,000 from the university. He has $1,400 of federal tuition carried over, but doesn't have any unused provincial tuition credits carried over from last year. And that's because if we were in Ontario, there wouldn't be any. So in addition to the support payment she received, Edith has some income from work and an investment. She made installment payments to the CRA of $5,000 in 2021. She paid the bill of $635 from the dental clinic for Richard's root canal dated February 15th. So let's look at some of the information here. So Richard is enrolled full-time. He received a scholarship from $5,000 from the university. How are we going to report this on Richard's tax return? Nothing, exactly. He is in a qualified program. He's full-time. He doesn't report it, right? You don't put it on the tax return. All right, so another comment here. Why do you think Edith is paying installment payments to the CRA? Why isn't there enough tax withheld from her T4? That's correct. You'll see this a lot. I see this a lot in the office when we have people who receive spousal support. They tend to have to owe money. So if this has been going on with Edith since 1999, so she knows every year she's going to owe money, so she pays installments to the CRA. All right, so let's go, let's look at the, here's the T4 for Kenneth. So we don't have to do anything with the return, but you'll notice he have union dues and he has RPP, and he also has a T3 form. Now, what does he have on his T3 form that is significant? He has management fees. So again, I just want to bring your attention to this. When you are doing problems in Tax Academy, they always love to put this little line in here because it trips everybody up. People they ignore it. But if you're doing a problem, this is one thing I highlight immediately and make a point that there's management fees. So that's the father. So now we have Richard's T2202, and it shows, you know, his SIN is there, and it shows that he was in 8 months full-time attendance, and his tuition fees are $6,400. His T4A, box 105, that is scholarship income. So we already discussed that we will not have to report this on his T1 return. And then we have an RESP plan, and notice it's a T4A in box 42. So he took out $13,450. So this is the growth they withdrew from the RESP, so the growth has to be included in Richard's income. So $13,450 will be Richard's income. Then we have the T4 for Edith. What does Edith have here? She has RPP contributions, so that could be a deduction from her income. What about this box here? What does box 85 on the T4 represent? I'll answer the question in a moment in chat. Let's focus on Edith. What does box 85 of the T4? What is this? That's true. It's premiums that she's paid. So this is considered medical, a medical expense. So we see this a lot in the office. A lot of times people, again, don't have other, I very seldom see somebody can claim a medical claim for this because their income is too high. So, oh, just a second, my phone's going off. It's 11 o'clock. Do you know where you are? No. Anyway, so yeah, medical expenses for Edith. Okay, that's significant. So one of the questions here is from the sheet. Why has he two T4As? Okay, so because this one is a scholarship. So he received this from the university, gave him a scholarship of $5,000. So the other T4A is coming from his RESP plan. So it makes sense he'd have two T4As. But they're going to be treated differently, right? The scholarship income here, he's a full-time student in a qualified university. We will not have to report this income. However, again, the RESP, box 42, represents the growth that is taxed in the hands of the beneficiary. Does that make sense, Bashid? Okay, awesome. Okay, so let's move on to the actual questions. So, what amounts will Kenneth enter on line 21999 and on line 22000? What amounts will he report? Oh my gosh, fantastic. Last night's class didn't even do it. So I had to do it all. Thank you. Exactly. Thank you. So, no, Renita, it has to include both the, okay. Oh, sorry. So let's go next to this one. So now this line is this amount. So basically, Kenneth is required to pay both spousal and child support. That's the amount. He reports that on his return, but he can only claim a deduction for the amount he pays for spousal support. So $62.40 is the amount. So I'm not sure what the amount 9360 is. Renita, I'm not quite sure. So again, so this is what Kenneth has to report. He has to report the total amount of support, even though he deducts $62.40. And so then Edith, what is Edith going to report on line 12799? Exactly. It's going to be the same amount. And then what will she have to pay tax on line 128? Oh, okay. Yeah, exactly. The same amount. You'll notice the symmetry, right? Notice the symmetry? So the person who is paying same amount, but on different part of the form. And then Edith, on the income side, this is what she's reporting. And on the deduction side, that's what Kenneth's reporting. So Kenneth will get a deduction for $62.40, and Edith has to include in her income $62.40, and she's going to pay tax on it. Awesome. All right, next one. How much net income is Richard reporting on line 23600? So how much? Richard, the student, how much? Exactly. So there we go. So, I mean, I didn't do a T1 for Richard because he only has one item, right? So anyway, so one of the questions is, have you had X file separately and give you different numbers? Possibly. Most of the time X's don't come in together. Sometimes they do. The thing is, the government will be checking this. So it's not our job to do that, but the government. So, you know, if someone comes in, we're going to say, how much did you pay or how much did you receive? And really the government will be checking this. They're all over this. So don't you worry. Certainly if we had, okay, so the difficult situation, if I had an X file separately and me as a tax preparer, I couldn't really comment, tell one X what the other one was putting on the line. It's a violation of the confidentiality, correct? So generally we do not have them come in together and file. Have you ever experienced that, man? No, we're not going to do it. And even if they do, you cannot look at that information for the X. It's a violation of their privacy. So we're not going to have them come in separately, and I'm not going to go look at the return. Again, that's their issue. We can't violate their confidentiality. All right, so now for the tricky part of this problem. What is the amount of medical expenses that Edith can claim on line 332? Show your calculation. So what in the chat, what expenses can Edith claim for medical expenses? $635, and that would be for $635 for the root canal for her son, and box 85, which is $1,680. So the tricky part comes from the fact that we need to know Edith's net income because we need to know the threshold, right? And so what happens when we have a dependent, such as her son, who's over 18, and she paid medical on his behalf? So whose income number are we going to use for the son? Edith's or the son's? The son is above 18, correct. But she can claim she paid the medical fees. If he had paid them, then it wouldn't even go on her return. But the problem states very clearly that she paid the bill. All right, so therefore she has the right to claim the medical expenses. So yes, in that case, thank you everyone. That so it's a little bit of a trickier calculation. So what is Edith's net income? Because we need to figure out her the lesser of the threshold, 3% of her income or the threshold. What is her net income? So Abby has, here, let me find my my pen. 41,185.40. Does everybody know how that got calculated? So let me, I don't know, I had it here. Okay, so her income is, we have 35,780 plus 62.40, which was her support payments, plus her investments. Then we need to subtract $1,000. You see, for her, she had her RPP, and then we're going to subtract the CPP, her Schedule 8, her CPP. So that will give us the 41,185.40 for net income. So now, what is 3% of her net income? 3% of her net income, 3% of her 41,185.40 is equal to, what did we say here? 1235.56. 1235.56. Oh, here, I calculated this when I did the problem. All right, so here we go. So her claim is going to be the box 85, which was 1680 minus 1235.56 equals, I think it's 444, correct? 444.44. So that's what she's gonna, that she can claim, that's the amount she can claim for her medical expenses. So for her son, we determined that his net income was 13, where was it again? 13,450 times by 0.03, and that will equal, the threshold is 403.50, right? 403.50 for him. So what can we claim as an amount for him? It's going to be the 635 minus the 403.50, which is equal to 231.50. So those are they're going to have to be entered on separate lines calculated on the T1, which we will go through. So the total amount medical she can claim, so the total credit that she's getting, the total is going to be, oh, I spelled that wrong. what happens when you hunt and peck. So the total is going to be 675.94. So does everybody know how we arrived at that? I will show you on the, I did do a T1 for Edith, and we'll go through it again. Yeah, we will go through it again on the T1. All right, I will show it to you. But that's so. If you want to maybe just take a photograph of that and show. That's the first part. You can take a picture of that photograph. Listen to me, picture. So, but I'll show you on the T1. So let's go to the last question. What can Kenneth do with the amount in the footnote section of his T3? Do you remember I pointed that out when we were looking at his slips? What is in the footnote section, and what can he do with that amount? Exactly. Thank you. Deduct his management fees, right? So I'm just going to get a little perspective. This problem, I told you about how this year we changed the format of the course, in which it used to be, we did theory up to about chapter 7, and then we started doing theory, TPS, theory, TPS. This problem is meant to go into TPS, which is why we're only answering select questions. They don't expect you to do the 3 returns. Once we start TPS, we will be doing multiple returns. We will be doing, partner returns with children's returns. So thank you for that. So, so we're just going to answer this. We're just going to put in carrying charges. So that's why we have a lot more information than we need. But we're just trying to relate it to what we do know. And thank God we don't have to do manual returns for all 3 of these. That would probably send me over the edge. So anyway, okay. So what I'm going to do now? Yep, I'm going to go, and we're gonna look on her on her return. So let's go to Edith T1. So I'm not going to go into the first part here. I'm just going to, I will send this to you as part of your chapter review. So I put in her employment income, Edith, and we have our investment income. We have the support payments. You'll notice how this is the total support, and this is the taxable amount. Then we add up her total income. Then she got to deduct her RPP, and I did do the Schedule 8 calculation for the enhanced CPP. So those are her deductions. So that's how we got to her net income. And that's her taxable income also. I did calculate her tax. It's not relevant. We're not going to have to answer that. So she can claim amount for her personal amount. Then she has her CPP, EI, and Canada employment amount. Now we're going to go to her medical expenses. So medical expenses that are claimed for self, spouse, dependent children born in 2004 or later. So this is why we cannot put her son's medical expenses here, because he was born in, when was he born? He was born in 1998. So this is from her box 85 under T4. What is her net income? This is her net income, 3%. There's the threshold. So her medical expenses minus the threshold, her 3% of her net income, we deduct that. So her claim for her medical is 444.44. Allowable amount of medical expenses for other dependents. So this is, again, this is the part where it's a dependent that is over, that was born before 2004. So this is, she could have other dependents. She could have her mother living with her and pays her medical expenses. She could claim it. In this case, it is her son. Now, I didn't do the federal worksheets for here because I just calculated it on the sheet that I showed you. So let's go back to that calculation. So let me go back to here. So basically, this part here, we go back to here. I calculated her net income. I calculated how much of her expenses, the threshold. So it was the 1680, her medical expenses minus threshold. That's her part. So the part for her son is it's reduced by his net income. So the expense, his net income is $13,450 times by 3%, $403.50. Therefore, she can claim the difference between what the expenses were minus his income. So it's only $234.50. So the total that she can claim for medical expenses, you combine them both, it's $444.44 plus the $231.50. Is that clear? I know many of you asked to explain this again. That's the calculation. So the question is, why does a kid doesn't claim his own medical? Because, first of all, he's not going to be able to make a claim, right? Because his income is so low. No, you can't do that because who paid for it? When you're dealing with somebody who's 18 or over, who paid for it? If Richard the son had paid for it himself, he would be putting it on his tax return and there would be no claim to make because his income is so low. Remember when we talked about medical expenses, how usually it's really hard to make a medical claim. You have to have really high income, high expenses, or low income and high expenses. No, it cannot be claimed by Dad because Dad did not pay for the expenses. So in this case, it says that the mother paid for the expenses, therefore she can make a claim for it. Now, let's say that his income was really high. Her son's income was $50,000. She wouldn't be able to claim it, and he wouldn't be able to claim it either. So you can see how a lot of medical expenses can never be claimed due to the threshold. Are there any other questions about this? So, good question. If the kid is over 18, has no income, what happens? Will you tell me? 3% of his income. What's 3% of zero? Zero. So how much in that case, how much could the mother claim? Exactly. She could claim, she'd get a credit for $635 because his income is zero. 0 times 3% is 0, right? Good. So, yeah, it's a little bit tricky, and I'm going to tell you, make sure you understand this because they ask a lot of questions on this. They always throw this in, always. You'll probably see it more maybe on your TPS exam. But make sure that you understand this when you're dealing with a dependent who's over 18. And it's very clear in the problem. If you go to the problem, it very clearly states. So one thing is that you have to be savvy about in this course is understanding the wording of the problems. She, notice how I highlighted? She paid the bill of $635 for Richard. That means that that she could make a claim for it, provided that his income is low enough that it's not wiped out by the threshold. So Satish has a comment here. In any case, higher income person can claim. Yes, they can. Yes, they can claim. The problem is we're dealing with that threshold, right? So Satish asks, or does it always have to be below income? It all depends on the income because of the threshold. Is the son considered a dependent? Yeah, he is because he's a student and he doesn't have enough money. No, he can. So if there's no divorce, which parent claims will get the benefit? Well, it'll have to be the lower end. I guess in that case, it could be either one. So you're right. If the parents were together and they have students and they pay their medical, it would be claimed on whoever can make, whoever needs it. So they'd have to decide between themselves. But in the case of the son, his income is quite low. So in that case, it's immaterial which parent, right? So it would be whichever benefits the parent the most. So that is correct. Again, you know, we really don't see a lot of claims like this, right? A lot of them. I know for myself, my sons are in school, and I would take their medical expenses, and they sometimes their income would just wipe it out. My one son, he went to Waterloo, he had good income. We had paid some medical expenses on his behalf, and his income was too high, so we couldn't even make a claim, and he couldn't make a claim because his tuition was applied. So let's go back to let's go back to Edith again here. Let's go back to this. All right. So allowable expense for dependents. So certainly somebody who is a student is usually still dependent on their parents. These dependents could be, an elderly relative that lives with you that has relatively low income. You could make a claim if you paid. We have the same situation, but our accountant doesn't consider our daughters. And you know what? I have to tell you, a lot of accountants don't know this. Okay, they don't know this. So your accountant doesn't know he doesn't know his rules, I guess. So now you know something that he doesn't know. Definitely. If you paid, but it's only if you paid for the expenses. If your daughter or son paid for themselves, you can't claim it. All right? So this dependent, it's not, no, it has nothing to do with an eligible dependent. It's not. No. So it doesn't matter. So you have a family, and up to the age of 18, you can claim all the medical expenses. Once they're over 18, then you have to then it's their net income that is involved. Can we claim? Okay, so line 33199. What's line 3199? That's not what I got. I have. Oh, you're right. Sorry. It was just a typo. It's just a typo here. There. Again, forgive me for my typos. This is tedious work putting it into these spreadsheets. So, okay. So, again, Bashid, what do you mean, can we claim? I don't understand what your comment is. I'm just waiting for Bashid before we go on to the next questions. From previous years. No, again, it's, you mean you can do, you can adjust your returns? So sure. So if you had medical expenses for your daughter and they weren't taken into account, you'd have to look to see if it makes a difference and you'd have to file an adjustment. We'll be talking about adjustments on Thursday. So the other question is from Thane. How can we claim the $635 if Edith and Ken paid? How can we claim it? Well, then you would choose. So whoever income would benefit the most from it. Because again, this line here, this amount here for medical expenses for other dependents is independent of either Edith's or Ken's. So they would have to, if they were together, they'd have to decide whose return it would go on to. That's how it would be decided. But if they are separated, then it's who paid for it. And in this, the problem here said that Edith paid for it. If Ken paid for it, then he could claim it. If the son paid for it, Richard, then he could claim it, and neither parent could claim it. All right. So hopefully that explains that. So I think that we've done Edith's part. There's nothing to show for Kenneth. So I'm going to bring up the Schedule 11 now. So let's do the Schedule 11 for Richard. So here we have our Schedule 11. And you'll notice what's at the very top here. We have unused federal tuition from your 2020 Notice of Assessment. And we were told in the problem that it is $1,400. When you're doing it in the office and you might have a carry forward come through in our software, do not believe it. Always go to the NOA, whatever's on Rep a Client, that's what you use. You do not use the carry forward from the software because we don't know if whoever did it properly. So you never trust carry forwards from the software. Always double check it. And in this case, we were told in the problem it's $1,400 carry forward. And again, I'm going to reiterate, the $1,400 cannot be transferred to the parent. It's only current year tuition fees. Yes. So we would have people who would come in from year to year. They may not come from the same office. I don't trust the work of other tax pros. And it's just because, you always look at the return and make sure that don't make assumptions about what happened in the past. This information, it says on here, your notice of assessment. You believe the notice of assessment. So 1,400. Now we have the next line, eligible tuition fees paid to Canadian educational institutions, and we saw on Richard's T2022 that it's 6,400. So we put in 6,400. Now we come to the part where, are you claiming the training credit? No, he doesn't have any training credit because he was born in 98 and it's 2021, so he doesn't qualify. So we're going to ignore that. And then, so basically we have, what is the available tuition available for 2021? 6,400. So there's no deduction for Canada training credit. Did he pay any fees to a foreign educational institute? No. So the total amount of his tuition available from this year is 6,400, and then we're going to add the carry forward. So we have 1,400 carry forward, and 6,400 is the tuition that he incurred in 2021, 7,800. Now, this is the part where we calculate how much of the tuition does he need to get his taxable income to zero. So we're going to enter the amount of line, if the income is 49,020 or less, we'll enter it in here, but it's not. His net income is 13,450. And remember, this is his net income from the RESP. We don't include the scholarship income because it is exempt. So then it says, enter the amount from line 99 of your return. So I'm not doing his return, but we're going to go to Edith's, and I'm just going to show you where is line 99. So we have our 13,808, and in the case of Edith, yes, she has these other non-refundables, but Richard doesn't. He doesn't have any CPP, so that would be zero for him. So let's just put in zero here, okay? So it's zero for him. He doesn't have any EI, zero, whoops, zero for him. Canada Employment Amount, it's zero. So basically this is all zeros for him, right? So zeros, zero. So the maximum he has here, add lines 82, 94, and 95. And so basically it is 82, it's 13,808. And then we have nothing else. So basically his line 99 is 13,808. All right, so basically they're saying up to this point, what are your non-refundables up to this point? And you'll notice that it's above your interest paid on student loan and your tuition, which is why we have to consider all these non-refundables. So Richard only has 13,808. So let's go back to his Schedule 11 now. So with Schedule 11, basically the amount from line 99 is 13,808. So 13,450 minus 13,808 is zero. What does that tell us? Let me know in the chat. What does this tell us? That's right. He doesn't need to use any of his tuition. He doesn't have to use any of it, because if he did, then it would be on here. But he doesn't need to use any of his tuition. Therefore, we said, what is the amount? Go zero. Enter whichever is less, the amount from 9 or 15. So what is line 9? 9 is 6,400 and 15 is zero. The lesser of that is zero. So the amount of tuition that can be claimed for him, that he needs to claim, is zero. So then we go to the next part of the form. They want to know his enrollment information. And in this case, doesn't have a disability or infirmity. He was in school full-time, so 8 months full-time. Then we go to the part of the form where we calculate the transfer that is available of his unused amount. So they ask you for, what is the amount from line 10? So let's go up. What was line 10? Line 10 is his total tuition available, the carry forward plus the current year. So it's 7,800. So the unused amount is 7,800. So it says if you're transferring an amount to a designated individual, continue on to line 21. So what is the maximum that can be transferred? It's $5,000. amount from line 16 of the previous page. So this would be the amount that the student had to claim. So let's go to line 16, and we determined that he doesn't have to claim any. So this could be a number. A student may have to use some of it, but in this case it's zero. So it's zero. So that means that there is fully, in this case, $5,000 available to be transferred. And again, how much are you transferring? If he chose not to, the $5,000 would be added, there'd be nothing here, and it would be, he would have $7,800 carry forward. But in this case, the problem said that he wanted to transfer $5,000 to his parent, so we're going to take $5,000 off of that, and that leaves us with $2,800 that will be carried forward for Richard to use in the future. And that amount, the carry forward, can never be given to a parent in future years. So there was a question here from Faye. If they had tuition fees, no carryover, and then has a receipt for books, we don't put books in, Faye. We don't put, you cannot claim books. And even in the past, you just got a credit of $60 a month education amount for living in books, but we don't have it. There's no books. You cannot claim for books. It's, you simply go with the tuition statement T2202 in the case of a full-time student. So yes. So, but let me just back up here. So Faye, this is a really good question, Faye, because what if he'd been a part-time student and he got the scholarship? So what was the scholarship again? Let me look at the problem. What was his scholarship amount? $5,000. So he had a scholarship of $5,000. So if he was a part-time student, he'd get a $500 exemption. Then, if he had books, he could deduct that from it, and he could deduct his tuition fees. So let's say that he was a part-time student, and he had $5,000. So we subtract $500, subtract his tuition, and in this case, how much was his tuition? $6,400. So actually he wouldn't have to, in that case there, you wouldn't even have to put the books in. He basically would be zero. He wouldn't have to claim any of that income, right? So anyway, that's just kind of an aside in which, if you were a part-time student. If you were a part-time student, I bet you wouldn't have tuition fees of $6,400. So let's make that a bit realistic. So let's say you had the scholarship minus $500. Let's say his tuition was about $1,200, and then he had books of about $500. So then he would have to only claim that would be $2,800, right? So that would be the scholarship income. So that's the only time, if you were a part-time student, that you could claim your books. When you're a full-time student, you cannot claim your books. So basically, let's go back to any other questions on here. What else did they ask you? Anything? No, that's just Schedule 11. So let's go back to our PowerPoint. I think this is here. So I think we've answered most of the questions. Okay, so again, these questions are pretty more relevant if we've done the whole returns and we would have looked at Kenneth and Edith. So, but let's just, well, I think we have enough information to answer this question. So, the Tax Academy is telling us that Kenneth's returns results in a large refund. Why do you think Kenneth would get a large refund? Based on what deductions and credits that Kenneth can claim. We're not asking about what it is, we just know he's probably going to have a good refund. What would the reasons be? Exactly. Thank you, Lorraine. That's right. So Kenneth is going to get a deduction of over $6,000 for spousal support, and he also now has the tuition that he's getting from his son. So yeah, we would expect that Kenneth would have a refund. Would it have been beneficial for Edith if Richard transferred his unused tuition credits to her instead of Kenneth? Yes, it definitely would. It definitely would. It would have saved her again. We talked about $750 credit. So if she owed money, it would be help her reduce her taxes payable in her case, right? But the value to either parent is $5,000 times the non-refundable rate of 15%. All right. Should Richard transfer his unused tuition fees to a parent, or should he rather carry them forward to use in the future? We did have this question earlier, but what would you say to Richard? Because students ask you this. They ask you, what should I do with it? So it really does depend on your relationship between your family. You know, some people actually fund their own education, right? So I remember my husband, I would say, well, are we going to take Jacob's tuition credit? And my husband would be like, no, it's his. And then he said, but how much are we supporting him? I said, well, we put all that money in the RESP. And then he'd go, yes, we will accept the tuition credit. So we did discuss it as a family. So really, it is a family decision. And again, just because the parents pay for it, I've had many parents come in and go, no, I want my child to have it. I want them to have all the benefits. So it really gets money now, gives the government. Yeah, exactly, Lorraine. Yeah, there would be an outcry. Certainly I haven't heard anything, but you're right. So you're all about getting the money up front. I am too, actually. I hate waiting for it, but yeah, it should. I would say in most cases, students do transfer to the parents because they are very grateful for the support they receive. But then I have students come in and go, I pay for it myself. I'm not going to transfer to anybody. That's a valid point, right? My part, I get upset when the parent demands it, and it's like, no, it's up to the student, right? Yeah. So question about line 33199. The federal worksheet does not show deducting 3% of the net income. So that's the worksheet, okay. Well, let's go look at a worksheet. I have a worksheet here. What's the worksheet? This is a worksheet for another problem. Let's just see. It says here, you can claim the eligible part of medical expenses that you and your spouse paid for each of the following person who depended on you. Your spouse or children 18 or older, so that does say here. So medical expenses for the dependent, enter line 3, enter this amount on line 33199. 33199, so let's go back to 199, 33199. Well, it does have to be. If you go look at medical, it has to be. So again, this federal worksheet, if we go back to our medical, let's go back to our medical. Again, I've never used the federal worksheet for that. However, let's go back to our textbook here, and we'll go to medical, taxpayers and health. Let's go to calculating the qualifying medical expenses, claiming it. So let's go here to claim medical expenses. It says here, if you go to this part here, line 33199, this, what does it say here? So it's just, the worksheet is just for the, what the claim is. But what does it say here? We have for other amount from 3199, so that is from, let's just see, okay, those are dependent children that are above it, so. Okay, doesn't relate. Yeah, so you do have to do 3%. Yeah, it's not in the textbook, is it? It's not here. But it is reduced by 3% of the net income. Let's just see here. Okay, so note, since expenses paid for minor dependents are reduced by 3% of the taxpayer's net income, whereas claims for medical expenses of other dependents are reduced by 3% of that dependent's net income. The expenses must be separated. So separate lists should be created for each other dependent's distinct from expenses for self, spouse, or common law partner. So Yeah, I guess it would be that the worksheet is misleading. Yeah, I would probably say that. Yes. So, and that's why we probably have a lot of confusion because again, I mean, I don't use that worksheet to do this. So, but it's possible that the worksheet in our software is different than the one we're using here because I noticed that our software federal worksheet doesn't mimic the government one. And again,
It's
the
so
federal
strange.
worksheet is not submitted on the tax return. It's just supposed to be an aid. So now we have a question here. Can a parent claim private school tuition for junior school students? Um, hmm, Let me think. Can they claim it tuition? Um, okay, so let's go back to what are the requirements for tuition. Does private school, uh, does private school tuition designated, is a private school a designated educational institution? Designated educational institutions include universities, colleges, and other educational institutions. Educational institutions certified by the Employment and Social Development Canada, universities. So I would say no. Tuition fees may be claimed only for post-secondary courses taken at a university college, courses that develop or improve the taxpayer's occupational skills. So I'm going to say no to you, Zinjun. No. The question is, even though Ken makes these payments every year, he never reported them on his TD1. Does that mean he doesn't report it? No. That's a really good question, Ying Yung Ching. So in the problem, it says, even though Ken makes these payments every year, he never reported them as a deduction on his TD1. Does it mean he doesn't report this? No. What the problem is getting at is when we're analyzing a refund, if a person has filled in a TD1 to recognize that every year they pay the support payments and they want it to be reflected in their taxes taken off at source. That's what they're getting at here. So they're saying that Kenneth made a decision not to do that. So it doesn't mean he doesn't report it. It just means that it's already the tax that he has taken off at work already reflects the fact that they've already reduced it. Does that make sense? Yes, it makes sense. And I'm going to give you an example. I did have a client a few years back, and he was paying. He made like $500,000 a year, and he paid his wife spousal support. And he actually did tell his workplace. So basically, he never got these huge refunds. He basically got piddly little $100, $200 refunds because he didn't want to wait to have a refund on his tax return. And I know the bias in our culture, everybody's all like, oh, I love a good refund. Well, here's a different perspective of, yeah, does he need friends? Here's a different perspective on refunds. If you have a huge refund from the government, that means they've been sitting on it for a year. You know, and people get excited. Not me. I look at it and go, the government just had my money and my refund for a year, and they didn't pay me interest on it, right? So, you know, people get way too excited about refunds, right? It just is the government had your money and they're giving it back to you, right? So in the case of somebody who makes the support payment, this client felt it was better to do it in that case. Yeah. So why let government earn it? Exactly, exactly. Why would you do that? I mean, there's a lot of misinformation about these refunds. And of course, you know, companies that are like, you know, come claim what's yours. And you're thinking, well, why didn't you claim it before so you wouldn't have to go through the refund process, right? So anyway, so that was the point of that because we used to actually get marks based on what is the reason for the refund, right? And so they want you to realize that people do, you know, make adjustments on their TD1. So another question here: what happens to the child's medical expenses when the child turns 18 in the year? Well, I mean, it's what is their age at the end of the year? So I guess the year that they're 18, when they turn 18, then you would claim it. I guess you could claim it because they're 18 part of the year. So maybe go into the 19th year. Let's just see what it says about that here. Let's go back to our chapter on health again and look at, here we go. Let's open this up and making the claim for medical expenses. Again, the rules are Other dependents.
It will work for the children.
Sorry, what's that, Dan?
I'm saying it will. Can you hear me?
Yes.
So part of claiming the medical expenses, you can do it for children above 18,
Yes.
so long they're supported by you.
Yeah. General rules here. General rules. What's a dependent? So it does explain that. I guess it can be tricky. You know what? I got to tell you, when you don't have a lot of medical expenses, it doesn't get audited, so there could be a lot of people doing this incorrectly. So I would think that it was if you're 18 in the year. It doesn't actually say that too, does it? Medical expenses. I thought we just saw this earlier. Let's have a look here. We had an example of a dependent. I mean, dependency is created by if the person doesn't have enough income to live on. And in the case of Kenneth, he doesn't have enough money to live on. So what happens to the child's medical expenses when they turn 18? Well, they're 18 part of the year, and then they're 19. Well, they turn 18, so they're in part of the year. Yeah, so for other dependent children. And what is it? It doesn't say here, does it? It does not. It says here 18 or years older. So here it is on the worksheet. It does say that you or your spouse's children 18 years or older. So once they turn 18, the year they turn 18, then it is considered. So what happens in the year? That's when you're going to use the income of the 18-year-old to reduce it. That's the 3% threshold because it's 18 or older. So when they turn 18 in the year, they're 18. I hope that answers the question, and it's right in here in the textbook in this section here. Right. So let me see, have we answered all the questions? Let's go back to our PowerPoint. So we did answer all the questions. So I'm just going to do a quick review. Basically, we've defined the different reporting rules. Oh, we have another question. For medical expenses, can we count the amount used lower parent income claim but claim on the higher? So I don't understand what you're saying. For medical expenses, can we count the amount, use the lower parent's income, but claim on the higher income? No. No, you can't do that. Only if the dependents are over 18, then it relates to their income. So no, the medical expenses, if you have, a couple and they have children under 18, is 3% of net income. So you'd have to look to see who can make the claim. Most of the time, the higher income parent cannot make a claim, and a lot of times the lower income cannot make a claim. So Bashid asked, so December 31st is important for the age? Well, if they turned 18 on December 31st, then they would be 18 in the year, right? So, right? You're considered an adult at 18 in this case. Yes, right. If they turn January 1st, they turned 18, they're still 17. So the other question is, can we, if have dependents too? So the question is, for medical expenses, can we count the amount? Sorry. Is it because Edith can get better credit? Exactly. Thank you, Abby. It does say 2004 or later. So I'm okay. So I don't know what you mean Edith can get better credit. No, the medical expenses were put on Edith because she paid for it. If Kenneth had paid for it, it could have gone on Kenneth's return. But it's a matter of who paid for it. If the parents paid for their a child who's over 18, their medical expenses, their threshold is the dependent's net income. It doesn't matter who it is. So it's the same value to either parent in that case. However, if he was under 18, it would be the lower income spouse. It could be more beneficial because it would probably be wiped out by the threshold. Again, let's not get too wrapped up in medical. Like, honestly, you know, a lot of times you cannot make a medical claim. You cannot. All right? So I hope I answered that question. Edith does not get better credit. The reason she's getting it is because she paid the expenses. It has to be who paid the expenses. Okay, so let's go back to the review then. We discussed the reporting rules for scholarships. We discussed RESPs and how the plans are affected by the Canada Education Saving Grant. We also discussed rules for the claim of student loan interest. We also calculated eligible tuition fees for a student on Schedule 11 and how to calculate the transfer amount. We have determined that the unused tuition amount can be carried forward and to a parent or a grandparent or a spouse, and you would make the appropriate entries on the Schedule 11. We also discussed deductions for the adult basic education assistance and eligible moving expenses. So for Thursday, again, submit your assignment as soon as you can if you can get it done, and make sure, don't feel like rushed, just make sure you do double check it, all right? Because once you get into ULearn, it's going to be quick. It's all about the prep work beforehand. So for Thursday, we're going to read the textbook 14 and 15. There's hardly anything in 14. It's just about some tax changes. Chapter 15 is all about the admin, and it's all about doing adjustments, and there's a fabulous problem. This is my absolute favorite problem in this whole textbook. I love it. We're also going to be discussing the provincial supplement. Again, the provincial supplement is in your Inkling, and if you like to read the provincial supplement, I did read through it already, and I will just tell you the salient points because there's things in there that we never see on the tax return, because some of them relate to employers, right? So anyway, if you have a chance to read it, fine. I'm also going to apologize in advance for the fact that we don't get a PowerPoint for it. I used to create my own, but I really don't have time. So we'll just go through, and maybe if you guys can bring it up when we're going through it, and then highlight the information. I will be highlighting provincial credits and stuff when we do TPS, and I will be showing you how to input it into the TPS. So basically, it says to read the chapter review problem, but take notes only. We will do it in class. So are there any questions? So we're basically done. We have one theory class left, and then you'll be doing the, yes, Raymond. Yes, that's right. You can do it anytime between now and midnight, November 7th, Monday, November 7th, because I'll run the report the next day. And after that, if you do it, you will not get a mark for it because it's not fair. We will be taking it up. Great. Okay, so I think we're done. Man, can you maybe stop the recording? That would be great. Okay, thanks. So I'm just going to close this now, and we have some more questions here. Any